This screencast will talk about the accounting topic of petty cash funds. Firstly, what are petty cash funds? A petty cash fund is a certain amount of cash that businesses keep aside on hand to pay for minor expenditures. These would include office supplies, coffee for staff members, cash needed to reimburse employees for business-related purchases, postage for small mailings, and lastly, to give customers change after a purchase. For a business to have a petty cash fund, their operation must involve three activities. These include establishing the fund, making payments from the fund, and lastly, replenishing the fund. Involves establishing the fund. A petty cash fund is established when a check is written for the amount of the fund, the check is cashed, the cash is placed under the care of an employee, and lastly, a journal entry has been created. In the journal entry, the petty cash account increases while the cash account decreases. The total assets remains the same as no cash has been disturbed yet. The second activity involves making payments from the fund. Cash is now established within the fund and can now be used to pay for qualifying expenditures. Payments are usually done so in one of two ways. Firstly, cash is taken directly out of the account to pay for minor expenses, or secondly, employees seeking to reimburse from the fund for payments that they have personally made. Since payments are made out of the petty fund, no journals are required. The last activity includes replenishing the fund. As the cash in the funds begin to decrease, the funds must be replenished. The receipts in the funds are used as documentation for recording expenses and are used to establish a request of cash to replenish the fund. This is done so by counting the remaining cash and cashing a check for the amount that brings the total cash in the fund back to the original account balance. This is an example of a petty cash fund replenishment report. The report shows that there is $30 left remaining from the original $250, which means $220 is required to replenish the fund. To back this up, the receipts are listed, and as a result, its total must equal to the cash requested to replenish the fund. At times, the amount of cash needed for replenishment does not equal the total amount of receipts. This may be due to not collecting the correct change or the custodian not obtaining all the receipts. As a result, the cash overshort account is created, which is a temporary account which can either debit or credit its balances.